Hello, everybody. Welcome to today's webinar. We're going to go ahead and get started now. So in today's presentation, we are going to be explaining warehouse insurance and kind of going over if your marine warehouse coverage can replace part of your property coverage. So my name is Meredith Lambert. I will be your host during today's presentation. I'm the marketing manager here at Risk Guaranty, which translates basically to me researching topics like this and creating educational content for all of you. So I hope you enjoy. Joining me today is Travis Smith, TRG's VP of Sales. Travis has spent the last 13 years talking directly to importers and helping them find solutions on both their marine cargo insurance and U.S. Customs bonds. This webinar is being presented by Trade Risk Guarantee, or as many of you know us as, TRG. We have been providing U.S. Customs bonds and cargo insurance solutions directly to importers since 1991. This direct-to-importer business model is unique to the international trade community since it cuts out the need for an additional middleman and allows TRG to become another member of your international trade team. We will be recording this webinar and it will be available on YouTube for future reference. If you want to be notified the moment it releases, I highly recommend you subscribe to our YouTube channel. We also post additional educational videos on our YouTube. So if you're not already, I would again encourage you to subscribe there. You can find us by searching Trade Risk Guarantee -TRG in YouTube. A link will also be sent out after this webinar along with the webinar recording. Now, as a quick reminder, this presentation is for educational purposes only and does not constitute legal advice. Please submit your questions throughout the webinar in the question box of the webinar interface. You can submit them throughout the presentation as they come to mind. We will be trying to answer those questions, at least the ones that we are able to answer. But for more in-depth questions, we will submit those to our cargo insurance experts after the webinar to get you a more unique response. Sometimes, people have these questions that are very unique to their situation. So by all means, ask them and we will get you an answer. Now I'm going to go ahead and pass the mic over to Travis to get into the topic.
Great, thanks Meredith, and thanks everybody for attending. In today's webinar, we'll be covering the following three topics. What is warehouse insurance? How to lower the cost of warehouse insurance? And what information do underwriters need to quote a policy? So what is warehouse insurance and why are we talking about it? Cargo insurance is intended to cover goods you own while they flow through the supply chain. For many companies, their supply chain includes warehousing goods as inventory. This is where warehouse coverage comes into play. You may have goods sit in a trucking yard for a brief time or at a consolidation station for a short period. This would be covered under your transit as a connecting conveyance. Now, warehouse coverage can be named and unnamed. Named warehouse coverage typically includes coverage from theft, damage, and even catastrophic events such as flood, windstorm, and earthquakes. Most underwriters will allow for coverage for unnamed warehouses, but unnamed warehouse coverage excludes loss from catastrophic events such as, again, floods, windstorms, and earthquakes. If at all possible, you're much better covered with named warehouse coverage, but unnamed warehouse coverage can be a handy add-on for some companies. So we need to distinguish between warehouse and warehouseman's insurance. A third-party warehouse has warehouseman's insurance. This is liability insurance to protect the third-party warehouse owner in the event that they are liable for the loss. It is important for the owner of the goods in the third-party warehouse to secure warehouse coverage. This is an insurance policy that the insured themselves secures in order to protect their goods. So for example, in the event that goods are stolen or damaged during an act of God, the goods owner would typically be reimbursed for the insured value of the damaged goods under the warehouse policy. Now, on the other hand, the owner of the warehouse itself does have a certain amount of liability in the event of a claim. The warehouseman's limit of liability is the maximum amount of money the warehouse owner is liable for in the event of a loss. Don't assume that the value of your goods stored in the warehouse is under their limit of liability. So this is very similar to the carrier's limit of liability when we are talking about shipping goods internationally. Standard warehouseman limit of liability coverage limits the liability to a small percentage of the lost or damaged cargo's value. In the event of a claim, the warehouseman must first be found to be at fault in order for their limit of liability to cover any loss. And the warehouse provider may only be liable to pay the cargo owner cents per pound if they are responsible for the loss, and only when the warehouse operator is negligent. In the same example as earlier, if the goods are damaged in an act of God event, the warehouse owner is not liable for the loss. Therefore, the owner of the goods would receive no reimbursement from the warehouseman's insurance. This is why it is important not to rely on the owner of the warehouse to provide any kind of coverage for the loss of goods being stored in their facility. So we're going to take a second and recognize that many of you may use third-party warehouses. You may own your own warehouse, or you may use a combination of owned and third-party warehouses. Warehouse coverage under marine insurance can cover all these scenarios. So we've discussed the need for warehouse coverage. Let's take a look at how warehouse policies are secured. Often, the insured secures an insurance policy for the time their goods are in a warehouse as a part of their property policy. An alternative way to secure warehouse coverage is by adding warehouse insurance to your marine cargo policy. Or if you don't already have an annual marine cargo policy, obtain one with a warehouse rider. Keep in mind, a marine cargo policy can apply to any mode of transportation: ocean, air, rail, small package, LTL, FTL, truck. It has an ocean cargo policy, has three parts to it: international transit, marine warehouse coverage, which we're discussing today, and domestic transit. You can choose to have all three sections apply in your policy, which would be called a stock throughput policy, or if you only need international coverage, it can just cover international. All right, let's get to the meat of it. How can you lower the cost to insure your warehouse goods, and why costs have been on the rise? Over the course of the past year, there has been a steady rise in the cost of property insurance. In the second quarter of 2023, the average premium renewal rate change for commercial property insurance averaged 6.4%, with the most significant change in rate seen in April of 2023 at 10.09%. This is much higher than the 6.05 we saw in April of 2022. But why have rates been increasing? No surprise. The cause of the rise in cost can be attributed to a variety of extreme weather events over the past 10 years, as well as the widespread inflation seen worldwide. You can't get around inflation. Looking at the charts here, you can you can start to see a distinct correlation between these events and losses experienced by insurance providers. Starting back in 2012 with Hurricane Sandy, we saw a spike in the amount of losses towards the end of the year following the storm. And again in 2017, we see a huge spike towards the end of the year following 3 large hurricanes that year. Harvey, which hit Houston area with extreme flooding, Irma, which affected the entire state of Florida, and Maria, which devastated Puerto Rico. Then we see our next big spikes in 2020 as COVID took effect and inflation began. Inflation has continued into more recent years and is happening right now with other global events like the Russian-Ukraine conflicts exacerbating the problem. Inflation impacts insurance premiums across the board. Whether you secure your warehouse coverage through your general property insurance or if you secure your warehouse coverage through a marine cargo policy. The takeaway is that since it was more common for companies to secure warehouse coverage through their general property policy, the losses as a result of these catastrophic weather events have been realized by the general property underwriters, by largely not by marine underwriters. This leaves the marine underwriters with a cleaner book of business and more opportunity to come in with lower premiums. So one potential solution to these rising costs is to add your warehouse coverage to your cargo insurance policy. Marine cargo insurance is a type of property insurance, but it is quoted separately from your general property insurance. Therefore, this can result in a lower overall rate. So, how do we make underwriters love your risk? Simply requesting warehouse coverage won't help you secure the best possible premium. You need to know how to convey specific data points that are important to marine underwriters. First, they're going to want to know about security. Are there fences, lighting, live guards, and/or burglar alarms? If there are alarms, are they monitored by a central station? An alarm monitored by a central station would be a security system where once an alarm is triggered, it notifies a security company. Think of SimpliSafe or ADT. SimpliSafe, sorry. With these services, they call the police for you once the alarm goes off. If it is not monitored, an alarm might go off when there is a break-in, but nothing else happens. So these might be obvious precautions for many warehouses, and you may have them in place, but if you don't convey these points to the underwriter, then the underwriter is left to assume, and that will not help you secure the best premium. Even if your warehouse doesn't have top-notch security in place, it's better to outline what they have in place rather than leave the underwriter to assume. In any scenario where the underwriter doesn't have these data points, it's going to hurt your premium. So the second thing we're going to look at is building construction. What materials make up the building? The more information that can be provided on the building materials, the better. However, it is best to at least let the underwriters know if the frame is wood, steel, or concrete, non-combustible, and/or fire resistant. What year was the warehouse built? When did major renovations occur? The priority here is to determine how susceptible the warehouse is to damage via a weather event or fire. Then we get into fire prevention. For example, are there sprinklers? How many fire extinguishers? And what is the distance to the closest firehouse? And again, if there is a fire alarm, is it centrally monitored? Fire prevention is a big concern for underwriters since a certain amount can be prevented. Are there other business practices within the warehouse? Some warehouses are attached to retail stores. This is not ideal since it typically means there is more foot traffic in and around the facility. Underwriters don't like having the general public to have access into the building. And then finally, do the goods that are insured require temperature control? So if any of the goods in the warehouse require refrigeration or other types of temperature control, we're not talking about air conditioning, but is specifically concerned with goods that require refrigeration or freezing. If the warehouse is temperature controlled, are there backup generators on site? How often is the refrigerator system maintenanced and by who? What type of refrigeration system is it? Now, we discussed what data points underwriters want to see to get you the best premium for the warehouse coverage. One document that can help streamline the quote process is a COPE form. COPE stands for construction, occupancy, protection, and exposure, COPE. All warehouses have a COPE form. The COPE form was prepared by the warehouse's insurance agent to secure their insurance. This form contains much of the data that we just discussed. If the warehouse can supply this COPE form, it will help secure the best premium and streamline the quote process. Again, the acronym stands for the following. C stands for construction. And again, it is specifically referring to the materials used to construct the building. More specifically, is the frame of the building built with wood or steel? And is the exterior of the building made of bricks, stucco, cinder blocks, or siding? O stands for occupancy. This refers to what the building is used for, because a commercial building that manufactures plastics or wood products is a very different risk than a commercial building used for warehousing metal parts. P stands for protection. What is protecting the building from common insurance perils like fire, flood, theft? This includes having a functioning sprinkler system and third-party monitored alarms. And then E stands for exposure. Are there any buildings or hazards that could potentially cause damage to the insured building? While COPE information is primarily applied to commercial property insurance, there is a lot of overlap with the information a marine cargo insurance underwriter is going to want to know. What I find is that if you call the warehouse and ask for the COPE form, 50% of the time they have it. Otherwise, you need to prompt the best contact at the warehouse to ask their insurance agent for the COPE form. The agent will have it. The COPE form is helpful, but by no means required to quote.
Okay, so thank you, Travis. And so now we're going to open up the discussion for some questions. Again, we're only going to try to answer the questions that we feel are appropriate for, for myself or for Travis to answer here. If there are any more specific questions to your specific situation, we will pass those along to our cargo insurance experts to answer after the webinar.
Okay, while you guys are submitting the questions, just a bit about TRG. If you can't tell from this presentation, we geek out on cargo insurance and U.S. custom bonds. That's really our niche, and that's what we know well. On the cargo insurance side, we have 5 or 6 markets we quote through. Within that niche of cargo insurance, we even have one market specifically for perishable goods. So if any of you out there ship pharmaceuticals or food goods, please think about quoting through us. They're a great market for that. We have in-house claims handling, and similar on the bond side. We also have in-house claims handling. Anybody who ships internationally has a U.S. Customs import bond, and one thing that sets us apart on the bond side is that all of our bond clients have access to our software that collects your customs data and analyzes it so you can have access to it at your fingertips.
Okay, we're going to go ahead and answer a couple questions. Again, if we don't get to yours, please still submit them and we'll get to them after the webinar. So the first question, do you sell per shipment insurance?
Okay, that's a great question. TRG right now does not sell per shipment insurance. We only sell annual insurance. We work with relatively smaller importers all the way up to tens of millions and hundreds of millions of dollars of goods imported. The minimum premium we write on an annual policy is very low. It's $750. So even if you're considered a smaller shipper, there's a good chance we can come in at a very low annual premium to get you the best coverage possible at a good rate. That $750 is lower than many other agents will write an annual policy at.
Okay, second question. Can you insure LTL or FTL trucking?
Okay, yeah, and I think that came up briefly during the presentation. As mentioned, and cargo insurance has three parts. There's international, there's domestic, and there's warehouse. So the domestic transit, in my mind, is where LTL, FTL trucking comes into play. We absolutely can cover LTL and FTL trucking. It's a little more difficult, but if one of you out there, some of you out there need a policy that only covers domestic trucking, generally we can get you quotes on that. Typically, marine cargo underwriters want some volume of international transit. Also, what comes to mind when we mention LTL, FTL trucking is that for the international transit part of the coverage, that tail end, the drayage where it goes from the US port for importing to the final destination, or for exporting from the origin point to the US port, that drayage part is covered on international transit. So yeah, we can cover LTL, FTL trucking.
Okay, and then another question here. When do you think rates will go down?
Well, I wish I knew. It's going to depend on inflation. That's anybody's guess. And whether we continue to see catastrophic events like hurricanes, wildfires, ships catching on fire, all that scary stuff. I guess if I had to say, I'd say they'll continue through 2024, higher rates. But really, I don't know.
Yeah, it's kind of hard to predict the future in that way, but I think at least adding this to your marine cargo can help you, at least in the short term, get a lower rate. That's kind of the message we wanted to convey. But in general, the property rates are probably going to remain going up. Okay, I think that is all of the questions that we have at the moment. Again, if you have any questions after the webinar, you can always submit those to us. So thank you for taking the time today to attend the webinar. We know that this is a confusing and unprecedented time. It kind of always feels that way, and the TRG team wants to provide support where we can. If you have any questions, please don't hesitate to reach out to me directly at marketing@traderisguaranty.com. Additionally, check out our blog, traderisguaranty.com/TRGpeak. It's got a treasure trove of excellent articles and information. Don't forget you can find us on Facebook, LinkedIn, and of course YouTube. We will be sending a follow-up email most likely tomorrow or Monday with links from this presentation, as well as the recording of the presentation. And again, thank you for attending the webinar. If you have any further questions, I'm going to leave this kind of open for a little bit. You can still submit them. We will reach out after the presentation. Thank you.